Kitco Mining's special coverage of Gold Forum Americas is brought to you by Metalla Royalty.
Great bear or great cash cow? This is Paul Harris for Kitco Mining at the 2024 Gold Forum Americas in Colorado Springs. Joining me today to shed light on this is Paul Rollinson, CEO of Kinross Gold. Paul, welcome to Kitco.
Thank you for having me.
Bulk of this conversation is going to focus on Great Bear, but before we get there, I think it'd be worthwhile taking a step back and looking at the recent evolution of Kinross Gold to put the context of how we got to where we are today. And looking back, it's perhaps been a dramatic and at times a traumatic past 10 years or so for Kinross. The company walked away from Fruta del Norte in Ecuador. Then you had to sell assets in Russia because of the conflict that country's involved in. And then you acquired one of the best new discoveries of its generation. How has that period of time been from your side of the tracks?
Yeah, well, that's a good question, Paul. Thank you. I did come in around 10 years ago, and there was a bunch of things that needed to be addressed. The Fruta del Norte, I think, is another good example of our technical acumen in terms of our ability to identify good new prospects, and it certainly is a fabulous resource. At the time, it was a different world geopolitically. You may recall Ecuador got rid of international arbitration. I think they just moved in and taken the airport back. And in our case, in particular, the government at the time was pushing for a 70% revenue windfall profit tax. So, and there was also a clock ticking, use it or lose it. So we made the difficult decision of moving out. That was really at the start of my chapter. We put more focus into Tasiast, and I have to say Tasiast has turned out to be one of the best gold mines in Africa. We just completed the 24K expansion. It's now producing about 600,000 ounces a year at less than 1,000 AISC. So really one of the best gold mines in Africa. So look, we've come a long way. Great Bear was, as I say, a great opportunity. We wanted to get assets ideally in Canada, North America, but ideally Canada. And what I would say to the market at the time, the challenge with Canada is it gets competitive and expensive quickly. So if we're going to be successful in getting quality in Canada, we're going to have to make a geologic call early. And that's what we did. We were under CA, and we studied that project intently for 3 years before the announcement to buy it. And so we had modeled all the drill holes. We basically built our own internal model of what we could see was going to be a high quality mine. When we announced the deal, it was in late 21, and we closed in February 22, there was no declared resource. And so the market was, as we expected, saying, oh my God, what have you done? What did you buy? There's no declared resource. We knew there was a mine, and here we are, I'm happy to say, 30 months later, drilled out what we see as a very high quality mine. Call it 500,000 ounces a year at about an 800 AISC. That'll make it one of the best gold mines in Canada. So it's just been a great example of getting in early, doing the technical work, having the confidence, and we obviously wanted to get that PEA out before this event here, and that would allow us to get into more detail with investors.
I think it's been interesting, the evolution there, as you say, when you closed the transaction in 2022, the market sort of sniffed at it because there wasn't the resource. When you then put out your maiden resource, the market sniffed at it again because it was perhaps expecting more ounces. But now with the PEA, the preliminary economic assessment, your stock was up, I think, 5 or 6% on the day the market said, wow, this is great. How is Great Bear shaping up?
It's wonderful. I mean, technically, it's met or exceeded all of our expectations. We've also, we're a bigger company, so we're not capital constrained in a way that has us sort of, always looking for capital. So we've also done a lot of work that wouldn't necessarily happen at this stage. We've done 35 kilometers of geotech drilling. We know the ground is great. We've done lots of metallurgical testing. And everywhere we go, the metallurgy is clean. It's going to be a very high recovery. It's a very straightforward mill. We consciously went with a small, manageable 10,000 ton per day mill. That for us is off the shelf, plug and play. So as I say, the mineralization, our thesis, the reason we got excited, Paul, we're in the Red Lake camp. Red Lake is known for high-grade veins. So my analogy is think of a 2x4 as a vein. What got us excited was the Hemlo analogy in the Red Lake camp. And Hemlo is like a sheet of plywood. And so, drilling that sheet of plywood has been very straightforward. And the mineralization at Hemlo is orogenic, which means it's coming from depth to surface. So we had a very strong hypothesis of continuity along that plane and depth extension. And so what we've managed to do is in very short order, 30 months, scope out this PEA, very manageable capital, 1.4 billion, 500,000 ounces a year, $800 AISC. If you did the margin, AISC margin on spot today, that's pretty dramatic cash flow. That's over 800 million a year annually. It's got a quick payback. At 1,900 gold, it pays back in less than 3 years. So it's just looking really, really positive for us.
Now, as you say, the PEA yielded some very decent financial metrics at a $1,900 per ounce base case scenario, but at spot prices, they get really supersized, which I think really shows the leverage to the gold price that an asset like this has. And perhaps, if you don't mind me being a little bit cute, you perhaps have to rename it from Great Bear to Great Cash Cow.
Yeah, that's a good one. No, and seriously, though, again, it's a great project at 1,900, but as I say, if we're hanging in around these commodity prices, 800, 900 million a year of free cash flow after AISC, pretty outstanding.
I think one of the things the market got excited about as well, Great Bear Resources, the junior you bought, most of their drilling was relatively shallow, but you're not capital constrained. You've done a lot more deeper drilling, and you're showing a lot of deeper potential. You obviously made the Hemlo analogy as well, going to depth, the orogenic veins that go to depth. What do you think Great Bear could eventually become?
Well, look, I think really it's not as cost effective, but we wanted to show proof of hypothesis on depth extension. So we have traced this mineralization, this plywood, if you will, down to 1.6 vertical. And now, of course, to drill 1.6 vertical on an angle, you're over 2 kilometers. That's costly drilling. So we're comfortable, and to drill more resources at that depth is taking you into the 40s. So we're going to stop with the surface drilling, and the next chapter is to put in an advanced exploration decline so we can drill from underground more cost effectively. But the Hemlo analogy, if you look at it, and there's a lot of similarities, our geos worked at Hemlo. That's also why we had confidence. That produced over 20 million ounces. And we just came out with the initial first glance of 5 to 6 million contained. So I think this will be a 8, 9, 10 year open pit, and it's probably going to be another 20, 30 year underground. Okay,
what are the next steps there? You mentioned an exploration decline. When do you anticipate that going in?
Yeah, it's all about permitting now. So we have a parallel track on our permitting process. The advanced exploration, so it's exploration, not production, that's a permit we look for from the province of Ontario. And we think we're close. We've been working through that this year, and assuming we get that permit soon, we'd like to start early works later this year. So that would be, clearing trees, some civil works, that sort of thing. The project, the mine itself, that's a federal permit. What constitutes whether you're in the province or federally is the mill size. If you're greater than 5,000 tons per day, you're in the federal process. So we're 10,000, we'll be in the federal process. What will drive timing there is the filing of the environmental baseline or the impact statement. And we're on track to file that impact statement next year. After it goes into the government, we're basically in a bit of a wait mode. There's no date stamp that says, it came in and we'll get back to you in 180 days. We wait and we answer questions and we go through comments. So if you were to look at precedent, that's all we can do. We can't advertise more than precedent. Typically, it's been about 2 years of federal study after you submit that baseline before you can get your mining permit. But the great thing here is with the advanced exploration, we can be declined underground, do some drilling, do some development, and be in a really good position for when we get that permit to mine.
Okay, excellent. Now, over the summer, Kinross also took a 9.9% stake in a junior explorer. This is part of a broader strategy of the company investing in juniors. Can you talk to us a little bit about what that strategy is, what you're looking for and where?
Yes, well, good question. We do. We have a portfolio of what we call these junior investments. And basically, the way I think about it, we have a strong exploration group, internal. We do a lot. Most of our budget is brownfields, 90% of our budget. Our budget annually is about $150 million. 10% is greenfields. But what we also do is we look at other juniors. And if we like the people running the company, if we like the prospectivity, and they're looking for capital, we like to come in and make an investment. And no strings attached. Just get you a seat at the table and we can talk about geology early. Maybe you should think about drilling here, or maybe you should drill over there. And I look at it as a leveraging of our geologic mindset from our exploration group. So we have a number of them. The one I think you're referring to this summer was one where we invested in Wyoming, and we saw some really interesting geology that could be a new breakthrough on geologic understanding. So we like to do that, and at the end of the day, if it turns into something greater, then hopefully we've built some goodwill and a relationship.
Well, it's good that there is money coming to the sector for exploration. The sector's been quite starved of that. Is it a challenge, though, because for an explorer to do a meaningful program, that obviously requires perhaps more money than, I'm getting myself twisted here, it requires a significant amount of capital, and if you put that amount of capital in, you're going to get perhaps a 10, 20, 30, 40, too big a stake in a junior. So how do you sort of... Well,
we tend to stick below 10%. We don't really want to be an insider. We don't really request a board seat. We just want to be a friendly investor with a conversation around geology and exploration. I call it geologists, beer, and pizza. Let's get the maps out, let's brainstorm and let's think about where we might add value and help you and vice versa.
Okay, so a lot of the benefit there is knowledge sharing rather than physical dollars.
Exactly, knowledge sharing and building a relationship.
Okay, let's switch continent. Let's go to the southern cone, to Chile. How are your growth plans in Chile shaping up? What are the next steps for La Coipa and Lobo Marte, your exploration development project there?
Yeah, good question. So Chile, our Chile strategy is exactly that. It's we see ourselves mining La Coipa till the end of the decade. That's very high margin, great cash flow contributor. We have resources. We just need to keep permitting laybacks to extend mine life to the end of the decade. And then we say a linear transition from La Coipa to Lobo. And why do I say linear as opposed to parallel? In Chile, in Region 3, Atacama, it's all about water. And we have permitted pumping water wells, which is the best you could hope for because we've been pumping water for decades. And so we have hydrology that demonstrates over those decades we've had no detrimental draw to the aquifer. So if you look at the location of our water wells, they're actually physically closer to Lobo Marte than they are La Coipa. So our Chile strategy is to use our water for La Coipa to the end of the decade, and at that point look to send the water in the other direction, same amount, no more. We've got the hydrology to support it, and use that water for Lobo. So Lobo is meant to be a post-Great Bear. We're just ramping up now on our full environmental baseline, so we've got lots of time to do a tier one job on getting that impact assessment done.
Okay, La Coipa and Lobo Marte are in the famous Maricunga district. There's some other undeveloped gold deposits there. As you mentioned, water's a key thing. So does that position Kinross to be the player to consolidate, have a broader consolidation in the Maricunga?
Yes and no. I think we're content with the water that we have today for what we have. And if I put Lobo Marte behind La Coipa, our visibility of production in Chile is, again, out into the 40s. End of this decade, start a new mine, we're well out into the 40s in Chile. The question will be, is there enough incremental water within our permit, and is it really pipelinable to whatever those other opportunities might be? I think the greater, I see a lot of smaller oxide gold deposits, resources, all over at Region 3. Some of them it's tough to justify on their own. It'd be great if we had desal, some kind of government, public, private partnership like electricity, getting electrons, some infrastructure of desal. I think if you got desal up the hill, you'd see a whole bunch of things light up. But I don't think we're there yet. Desal is really more in base metal land. I put it into context. For a gold producer like us, we're using about 68 liters per second. If you're in the base metal game, you're using 500, 600, 700 liters per second. That's why those guys are desal. That's why we can still draw, from the basin.
Okay, well, let's turn to another region where there's desert conditions, and that, of course, Nevada in the USA. You've got a couple of producing mines there, plans to grow and expand. What's going on there, Paul?
Yeah, let me take a step back. So we have 6 mines, 3 in the U.S., great real estate, Nevada, Alaska, and we have 3 out of the U.S., namely Tasiast, Paracatu, La Coipa. The 3 mines outside of the U.S. are generally the higher margin. So those 3 out of the U.S., that's 2/3 of our production of an AISC of about 1,000 to 1,100. So very solid production. The stuff in the U.S., Nevada, we would say, yeah, that's our more mature stuff. So our strategy for Nevada and Alaska is to find higher grade to supplement what we've been mining in the open pit. So one we just commissioned, we brought this little satellite in Alaska, it's called Mancho. It's 8-gram material that will truck over to the Fort Knox mill. 8 grams, when batched together with less than 1 gram, does wonderful things for cost, recovery, and mine life. Let's go back to where you started. Nevada, Round Mountain, we are mining in what we call Phase W, west. We are moving to Phase S, south. That takes you to the end of the decade. But what we've also done is we're now 2.5 kilometers underground. We've taken the bottom of the pit and we've driven a decline into the ore body. And it looks really good. We're getting fabulous widths and grades. And the whole idea here is we'll get that underground like a Mancho. This could be 3.5, 4 gram material that will blend with the open pit. So our strategy, again, whether it's Nevada or Alaska, those U.S. operations, we're looking for ways to find high grade feed that we can blend and help, drive better margins and obviously cash flow.
Okay. Now, your stock is up 60% more or less year to date. Are you starting to see new investors coming in and being interested in Kinross?
Yeah, definitely. I think the way I would describe, when the gold price is where it is today and the cash flows are certainly up as a result, no doubt that's a factor in attracting more generalist investors. And in our marketing efforts this past year, we have had more interest and meetings with generalists. And, you look last year, I think our average realized gold price was about $1,950, and we did $560 million of free cash flow. 24 is going to be a lot like 23, 2 million ounces a year, similar cost structure, similar capital spend, except now we're, $2,500, $2,600. So the gearing in the cash flow, if we did 560 last year at 1950, in the context of where we are today, you're tracking at, $1 billion or more. That is bringing attention. I think what we now have to do as an industry, as we all get this better cash flow, is, be responsible with that cash flow. Make sure we're taking care of our balance sheet, making sure there's an appropriate return of capital, because I think the generalists will judge it more on those traditional metrics of what's the dividend, what's the balance sheet, where's the financial discipline coming from the cash flow.
Now, as the gold price moves higher, do you expect M&A, mergers and acquisitions, to heat up? Do you expect consolidation to heat up? And if you do you see Kinross as the hunter or the hunted?
Look, let me start by saying we're in a good spot. We don't have any pressure. We've got a great organic pipeline. We just talked about Great Bear. We just talked about Lobo Marte. We've got another project in our portfolio called Curlew in Washington State. We've got Phase X Underground. We've got a lot of stuff. So that's a good place to be. And our balance sheet is excellent. We're tracking, I expect by the end of the year, we'll have our net debt to EBITDA down to, 0.4. Investment grade rating. So we have no balance sheet stress. We've got a great organic pipeline. So we can be very patient and look for opportunities. M&A is tough. It's not always as advertised when you get under the hood. We have a very strong technical team. That's part of our culture. We pride technical acumen. So we look, but we don't feel under any pressure. Now, having said that, I personally am a believer in consolidation. I think it's good for the industry, or would be good. We've got I use the Canadian hockey analogy. We've got too many guys chasing the puck. Things sometimes get built that shouldn't. If it's the only thing you have, you're going to raise money and you're going to spend money and you're going to maybe try and build it. And I think with consolidation, there could be greater discipline within the industry on what gets prioritized. But as again, in concept, I'm there, but in reality, it's always easier said than done.
Okay. Forward-looking question here. What do you want Kinross to look like in 3 to 5 years' time?
Yeah, it's a good question. I'm actually very comfortable with our outlook of production and cash flow and balance sheet out to the end of the decade. When people ask me what do I think about, what's keeping me awake, or what do I think about, I'm thinking about the 30s. I'm not worried about this decade. So it's Great Bear comes on, Lobo comes on, we're mining from underground. What else can we be thinking about? So I'm looking way deep into the pipeline of the future, that what's going to take this company through the 30s and into the 40s. We've got a couple of great anchor tenants that are coming online, but that's what I think about. I think what you'll see here is, again, pick your gold price assumption. The cash flow gearing, as I say, is pretty dramatic right now. And from an excellent balance sheet, I see our balance sheet just getting stronger and stronger, potentially net cash. So I think we're in great shape. Lots to do internally. We'll keep our eyes open in the broader world. But again, we're thinking more longer dated.
Well, it sounds like there's some really good days to come in the future of Kinross Gold. Paul Rollinson, thank you very much for joining us today.
Thank you for having me. Thank you.
There's plenty more to come from the 2024 Gold Forum Americas from Colorado Springs, so don't forget to hit that subscribe button to see all our videos. I'm Paul Harris, and this is Kitco Mining.
Kitco Mining's special coverage of Gold Forum Americas is brought to you by Metalla Royalty.